From credit crunch to Eurozone crisis, the world's businesses have been hit by one serious issue after another in recent years. As a new survey by the leading insurance market, Lloyd's of London, shows, the biggest concern for companies has shifted, though, from securing loans to the wider problem of the deteriorating trading environment. This year, most business leaders are apparently worried about losing customers as economic uncertainty and austerity measures hit companies. There are also major fears that skills shortages mean talented workers are harder to find despite rising unemployment. That's a big change from 2 years ago at the height of the credit crunch, when the availability of funds was apparently the main fear of the business community. Well, joining me now is Richard Ward, Chief Executive of Lloyd's of London. Mr. Ward, thank you very much for joining us this evening to discuss this. Now, you basically asked the bosses of 500 global companies about their anxieties. I want to strip out Asia and North America, if we can, and focus on European bosses. What is giving them sleepless nights?
They're concerned about the impact of the recession on their businesses. So it is things like loss of customers, which is a clear consequence of the economic climate we find ourselves in. What is happening to your revenues? They're concerned about legislation and how legislation might impact their businesses. Bad legislation is bad for business. Good legislation is good for business. And absolutely, they're concerned about talent. A talent and skills shortage has been clearly identified in the risk survey, and what businesses are saying to us is they're struggling to get the right people in to help them manage their businesses through this crisis.
The number one concern, a loss of custom or cancelled orders, was the suggestion here that that was a fear, or that that was actually happening. This is a reality.
I think, well, we asked them, how do you prioritise your risks? And this was the top risk that they prioritised, the number one thing they're thinking about. So I think they're starting to say to themselves, hold on, if this continues, this economic climate, we could well lose customers, we could well lose orders, and that will impact on the profitability of our business and our viability. So it's something that's absolutely at the forefront of their minds.
Taken in the round, when you look at the comments they're making and the fears and the anxieties they're expressing, do you come to the conclusion that Europe is in recession?
I don't come to the conclusion Europe is in recession yet. I think the jury is still out as to whether we are in recession, but quite clearly, if we see a continuation of the Eurozone crisis and the uncertainty over the future of the euro, then absolutely there's a concern euro will slip into recession, and that will impact businesses quite significantly.
Now, that's beautiful, because I wanted to talk about the euro, and you've linked to that elegantly for me. Now, I wanted to talk about it from the point of view of Lloyd's as well, because 50 insurance companies under the Lloyd's banner, you have an unbelievable amount of assets are sitting there to cover potential claims. £50 billion. Some of those assets are in government bonds, some of them will be in equities. I want to talk about the investments you have in UK companies, the stakes you have as debt and equity in banks. Do you share the ABI's concerns about the way in which banks are paying their staff?
Clearly there is a concern about the payments of staff in banks and the bonus payments, and yes, I do share those concerns. The important thing about a bonus payment, it needs to reflect individual performance, company performance, and then reality as well. And what we're seeing at the moment is a disconnect between individual performance and company performance, and when that happens you drive the wrong type of behaviour, which we have seen over recent years. So I think we do need to get that back into line.
So you too don't think that bank pay matches the performance?
I think in the past that's clearly been the case, and what I would applaud is a move towards getting a more direct link between company performance, individual performance and the bank bonus.
So would you, had the ABI asked you to sign up to this letter, you'd have put your signature to it too, would you?
I would absolutely contemplate signing up to it. I haven't seen the details of the letter just yet, but I know exactly the direction they're going in, and it's absolutely right to focus on company performance, the value you generate for shareholders, and see what the contribution of the individual is to that, and reward the individual accordingly.
And in recent years the banks have got that wrong. Now let's talk about also the stakes that, the investments you make in government bonds. You've made it clear that you are not exposed at all to the peripheral economies. I wonder, when you listen to what Nicolas Sarkozy and Angela Merkel had to say on Monday, whether you thought, now I feel more reassured, I feel maybe it's the time to consider buying up Italian debt, investing in Spanish debt again.
I think not just quite yet. I think we've got to see how this plays out, and we've had the S&P warning of a downgrade, so we've got to see what happens over the next 90 days. But I think from my perspective, as an insurer holding on to £50 billion worth of assets, those assets are there to pay claims. So we take risks on the liability side, we don't take risks on the asset side. So we are very conservative. And at the moment, I'm afraid, if you look at the Eurozone, there are risks around investing in governments in the Eurozone, and we do not want to take those risks on behalf of our clients where they want their money to pay for their claims.
You're not willing to invest in Italy or Spain still?
We have reduced our exposure to the peripheral European economies, focused on holding government debt in the UK, in the US, Canada, Australia and one or two other countries, narrowed our corporate bond portfolio to limit our exposure to European financial institutions to see this crisis out. And once we see it play through, then we'll be able to reevaluate where we invest our assets.
Okay. Richard Ward, Chief Executive of Lloyd's of London, in a crucial week. Thank you very much for joining us to discuss that.